9 Forex Trading Tips. Define goals and trading style. The best traders hone their skills through practice and discipline. They also perform self-analysis to see what drives their trades and learn how to keep fear and greed out of the equation. These are the skills any Forex trader should practice. Before you set out on any journey, it is imperative to have some idea of your destination and how you will get there.
Consequently, it is imperative to have clear goals in mind, then ensure your trading method is capable of achieving these goals. For example, if you cannot stomach going to sleep with an open position in the market, then you might consider day trading. On the other hand, if you have funds you think will benefit from the appreciation of a trade over a period of some months, you may be more of a position trader. Choosing a reputable broker is of paramount importance, and spending time researching the differences between brokers will be very helpful. You must know each broker's policies and how they go about making a market. For example, trading in the over-the-counter market or spot market is different from trading the exchange-driven markets. Before you enter any market as a trader, you need to know how you will make decisions to execute your trade.
You must understand what information you will need to make the appropriate decision on entering or exiting a trade. Some traders choose to monitor the economy's underlying fundamentals and charts to determine the best time to execute the trade. Many traders get confused by conflicting information that occurs when looking at charts in different time frames. What shows up as a buying opportunity on a weekly chart could show up as a sell signal on an intraday chart. Therefore, if you are taking your basic trading direction from the weekly chart and using a daily chart to time entry, be sure to synchronize the two. In other words, if the weekly chart is giving you a buy signal, wait until the daily chart also confirms a buy signal. Expectancy is the formula you use to determine how reliable your system is. You should go back in time and measure all your trades that were winners versus losers, then determine how profitable your winning trades were versus how much your losing trades lost. Take a look at your last 10 trades. If you haven't made actual trades yet, go back on your chart to where your system would have indicated that you should enter and exit a trade. Although there are a few ways to calculate the percentage profit earned to gauge a successful trading plan, there is no guarantee that you learn that amount each day you trade since market conditions can change. Expectancy equals %1 average win, % loss average loss. Before trading, it's important to determine the level of risk that you're comfortable taking on each trade and how much can realistically be earned.